We actually have something to discuss. The phone is definitely ringing, wanting to know why it's going up. We're gonna lean towards grain because, like I say, finally we have something to talk about. We're gonna talk about the corn wheat spread a little bit, definitely the bean spread that we've been talking about, and most importantly, strategies to do in the corn market right now, and what to store and what not to store.
And some ranchers and crypto.
Right, yeah, we'll hit the sale barn gossip as well at towards the end here on Cattle.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, I'm sure all of our fans are wondering where the podcast was yesterday, so we're going to start with a housekeeping note. We're recording Tuesdays for the next few weeks.
Sure, and it makes more sense. I don't know that they were looking at their inbox, just waiting for it to drop in, but hopefully they were. Tuesday's fine. It's fine with me. I like Tuesday.
I mean, Tuesday today, we got the grains, all of them are green, and cattle were red. What's going on?
Well, I mean, this is why those calls, when I first initially bought them, this is why you get to this price, and it's almost $4.50 now in March. Then you can market your grain, and you have the calls on. The couple guys that still had them on, after the report, I'm like, hey, maybe we should get out of this thing, and it was more me than anybody else. But the guys that had them on, could take the profits on that, which is about 6, 7, 8 cents. And they could make the sale, or they could just make the sale, or they could take the profits and make the sale. So there's a lot of different combinations. Why is it moving higher? You go on Twitter, of course, they'll say there's no crop out there. The USDA just dropped a really negative report. They found another 1.5 million acres.
It just appeared.
Yeah. So what I think you have going on is U.S. dollars dropping 96. I think was as low as it's been in years, and some money shifting around in commodities. And I believe they're buying corn and beans. Whether it's the China deal that isn't nothing's happened there, that might happen. Then you had the biofuel things. You got enough going on to make this stuff go up. And why is that important? Well, is it real or not? That's the main question. Is this a sustainable rally? And I think that's right where your grain marketing journey begins for this year, is how long do I want to keep this in the bin? Do I even want to put it in the bin if it continues to do what it's doing? What are my choices here? What do you see?
I don't know the answer to any of those questions, but we did talk a few weeks ago about being flexible with whatever you put in the bin and being ready to take it right back out. And I think that's going to be extremely important this year. I also think that having, whether it's a call strategy or a put strategy or a range or something, that we're in a time that it's probably time to market, and it's going to be hard to convince guys to market their grain around here.
Yeah, it is, because it's the same trap. It's like, well, they must know something. We don't know. It's 2020 all over again. I'm going to, if it's $4.50 already in March with all this bad news, it's going to be $5 pretty soon. So the same patterns that exist in the summer exist with the same excuses. They must know something we don't know. We actually did this last year. We went to $4.50 in December. A lot of people forget that. I'm fairly negative numbers, and not nearly as negative as this year. And then we dropped to $4.19 by mid-October. So we went to $4.50 by the end of September, then went to $4.19. And then we did walk up from there all the way into February. But remember, there was a big harvest drop. So what to store, what not to store. That's been the phone calls that you can tell guys are getting busy. The phone's getting quieter. My thoughts are on the soybeans. If we planted 81 million acres of soybeans, and if there was ever a year to store soybeans and you were undecided, this is the year to go for it. Now, China not buying any would worry. Maybe that could change very, very quickly. The market's ignoring all the negative news, and it's going counter the USDA's reports, which we did see in 2020 as well. And that's a very important signal. when the market's saying we need to go higher. But the way this stuff functions nowadays, it's hard to read too much into it. This is not 2020 with 2019 being millions of prevent plant acres, a record, and then everybody knew there was not a lot of crop out there, and it didn't show up until 2020, even though a lot of guys have given up by that point.
A basis was improving for
2 years,
a long time.
Yeah.
And that's not happening right now.
That's not happening. That's why look at basis. Look, the spreads they're so they really haven't been bull spreading too much in corn. A lot of carry in the market, a lot of basis weakness. That should be a real market. That's until you see that change. All this stuff is what you're looking for is ideas to do something to make a better price. I'm definitely calling guys now. Started making moves just today. Talked to a few guys and everybody was on board. We're finally at numbers that make sense to start doing stuff to earn money on those bushels, pick prices, even for hedge to arrives that you might want to have at the elevator. So this is where we would come in and start helping guys. Like, these are our targets. This is what we want. If this guy's at a hedge to arrive, are we looking to replace those with calls if we come back? This is the planning stage. There's a lot of different things going on. Every farm's different, like you've talked about. And they have different needs. But now we have something to work with. At least it isn't going down or just going back and forth at a low price. We're coming up. They're speculating a lot on the crop size, saying it's not as big. They're saying basis is going to improve. They're really being very optimistic with the market, and that's good. That's what provides the opportunities. So for me, where I said, I love this market. I think that it's going to provide a lot of opportunities. And there's already been a couple back and forth little windows where we've been able to be involved in, and that's been really successful. But it's been small singles and not even really doubles. But this kind of market's a much better marketing market than what we thought we were going to deal with. Do you run out there and market everything? No, what you do is you come up with a plan. If I market, am I going to own calls? Am I going to market here, wait for a pullback, then buy calls? Am I going to skip the calls altogether? Am I going to just sell calls? And again, we're not going to go over each strategy individual because, like I say, it's different for everybody. But this is the planning stage to really improve what is not a great price. Now you're getting a chance at least to start improving that. And the guys and the smart marketers use these windows to do that, backed by their physical grain. And pretty soon everybody's going to get really busy. There's going to be a lot of harvest pressure. I still think that it will affect the markets a lot. I don't know how you feel about it, but it's going to be a lot of grain coming in at once.
The only thing I'm really interested in right now watching is soybeans. I think it could be interesting if all of a sudden there is a bid, if all of a sudden we do see some orders from China. Soybeans could get really interesting, as you mentioned, the 81 million acres.
Yep.
That could get super interesting. The rest, there's opportunities out there, and finding the right ones for you is going to be the trick, and then deciding to make that move.
Yeah, and in decisions sometimes in these markets have to be made quick. Guys don't like that. They like to think and see what the market's going to do. But if we come up another 25 cents really fast in corn before we knew the true size of this crop, you're taking a risk by selling early, but you're also taking a risk by not even considering doing anything. Whether you're selling calls and buying puts, that's another combination. That allows you a window to profit higher than where we are right now, but at the same time protects this price. What strategies fit this year? And that's going to be the big discussions we have. And I'm just, like I say, this is kind of very similar to last year. It created some opportunities. Everybody was so bearish, came up very sharply in September out of the blue. This one's doing the exact same thing. And it almost feels like these guys are like, hey, why bring it down? Because we're just going to bring it up later. But they're bringing it up earlier every year instead of just bypassing all that harvest pressure and pricing it in. We're just skipping that, saying it'll get put away. But the storage is going to be an issue. The basis is already an issue, especially in our area and out west. The lot of yield up and down in Illinois. You're going to hear all kinds of stories this time of year. you're going to hear whatever you want to hear. It's really in the USDA's numbers. Unless you see those changing drastically fast, which I don't really see happening, they will trade the numbers eventually. So right now, it looks like these are all opportunities. It's just how high can it go in this small time period?
Yeah, I was, while you were chatting there, I was kind of looking at some other numbers. I think we need to talk metals, John, because, I mean,
all-time high
CPI came out last week, was a little hot.
Yep.
Gold looks better than cattle, to be honest. Silver's over 40. I mean,
yeah, and it's spilling over into grains. Just you have inflation buying happening here. Oil up 60, up a buck and a half today on no news. Now, if you read the news, they're going to say, overseas tensions. That's code for they have no idea why it's going higher. Sure. There's no more tensions today than there was yesterday. Of course, they're going to write the story around the price action, but what it looks like to me is you have general buying in commodities on inflation, and it's certainly happening in the metals. Gold, new all-time high. Silver, not an all-time high. What are we, 41, 42?
Yeah, 42 and a half or so.
Yep, and everything's been in a nice, healthy uptrend. My favorite, platinum, hit in the 800s not long ago. I did not buy at that time, and guys that usually buy it did not buy it at that time. And what's that, 16, 17 now?
I don't have the current one. I don't watch it like you do.
But it had topped out at 1100 and then came back. It was going down, and that happened a number of times. But the metals are going higher. Interest rates, they're expecting 3/4 of a basis, like a full point. And by the end of the year, that's what the market's pricing in. So inflation's starting to go again, and that's what we're seeing in commodities for sure. That can change very quickly. You get the stock market selling off, you get all that, but money's coming in. I think it's easy for grains to go up. I think it's easy for cattle to go up, even though it's had some bad news, a little bit of bad news short term. But if metals are going to go up every day, the rest of the commodities are going to go up. You got that tailwind, the US dollar's down, and that's why everyone's going to be afraid to sell their grains. It's like, oh boy, right. If the inflation bid comes under this, like it did in cattle, which it wasn't all inflation by any stretch, then I better hold all my grains. So I do fear guys are going to think that they can buy grains to whatever price. Well, what ultimately happens is you kill demand, but you never know. You never rule that out. They could just buy grains to buy grains. They did in 2008. It's happened once. We went to $8 for absolutely no reason, and then we were at $2.97 by September. So I think at $8.40 in July on $150 oil. So watch oil. That's the one to watch. That's where grains are going to go. If oil starts going higher, grains can go on higher in the back of that. Then you had the EPA announcement today. Soybean oil is all excited about that. I started reading about it, and it's like, then there's review periods, and then it does this, and then there's another review period. Very governmenty talk. That's a word that I'm going to use right there.
I like it.
It is. It's just like, who knows what's actually going to happen. Soybean oil swings around a lot, could affect the grains a lot, but it was on the RINs today, and it's hard to really decipher what's going to happen there, but that'll affect the grains too. But for me, I'm looking for opportunities now that help my corn sales. Soybeans, I'm going to wait and see on this trade deal that's so far only been TikTok.
Right. That was the only deal. I like that. Soybeans were up $9 on the announcement that TikTok was now legal.
9 cents. Yeah, it's and that's what that's when the market's in a good mood. It's got this tailwind. Like, any news is good news. The fact that they're talking to China is now good news. Before, if they would have walked away after that weekend and not had the trade deal, if it's in a bad mood, we'd have been out 20 in beans easy. But we're not. They spin it into bullish. The exact same thing happened last year. No matter what they said, soybeans and corn went up every day, basically into the end of September. And then it crashed very hard, sold off very sharply into mid-October. And we did crawl out of there for beans and corn. But it's doing the exact same thing. And that's what we're seeing a little bit.
Yeah, I will point out, we've talked about it a few times. It does seem like grains currently like those 3-day rallies, 4-day rallies. So take advantage while they're here, maybe, or watch and see, or you feel like it's going to be more of a run this time?
If you look at some of the carry in the market, and you're pushing up in already towards 470 for May corn. These are the numbers that start working again, and you have to be happy with that because we have terrible numbers. A lot of people aren't going to believe them, but the acres are the acres. They found another 1.5 million acres of corn. We're pushing up towards 100 million acres. Seems like there's going to be a lot there. That's why I'm working in corn. I'm going to take advantage of this rally. Call me and we'll go over what I'm doing. But this is most likely an opportunity unless there's a giant China trade deal looming in the background. And then, of course, you'd want to store everything if you think that's going to happen.
Makes sense. What else do you want to cover today?
Oh, I enjoy the markets more than I have. We've had numerous podcasts. We're going to talk about other stuff because there's really been nothing. But wheat's starting to move up, corn starting to move up, beans are. At least there's stuff to talk about. There's going to be more news here soon as they get out in the fields and we start seeing the actual yields. That'll move the market. So I'm happy that markets are moving, definitely creating opportunities. The volatility in cattle, we've had some success there. September got really underpriced under the index. Some simple bull spreads worked really good there in feeder cattle. So you get this volatility, you get these prices moving, and it provides a lot more opportunity for the hedger. And we just haven't seen that in a long time. Even midsummer, it just slowly trickled down. But volatility is starting to pick up. So I'm enjoying that. Now, if it gets into the energies, it'll be a whole nother ball game. It's already in the middles, certainly in cattle. So commodities are getting a little more exciting, and it takes a little more planning now. Whether you're locking in fuel prices, is it smart to do that this time of year, or isn't it? Is it what to store? Beans or corn, wheat. Again, not down every day. That's something. So I'm happy that it's improved. It's different and it's improving as the commodity markets always do. What isn't there one day? All of a sudden, there's 3 or 4 different opportunities the next day. There's probably some more announcements coming. So I'm enjoying the tick up in volatility. But as these guys on X and Twitter have been talking about the volatility, you can buy yourself a lot of time in grains still. The volatility is priced very, very low, and consider that when you're looking at your strategies on either side, selling calls or buying puts or selling puts. The buy side is definitely better than the sell side, but it won't be too long before that volatility will start moving a little bit, hopefully creating a little more opportunity there too.
Absolutely. Give me 2 or 3 spreads to keep an eye on.
Well, we've been talking about the July-November soybean spread quite a bit. There was a few things in cattle that I have been doing and some quick ins and outs. So definitely call on that if you're interested in cattle side of stuff. So on the corn, I feel like you don't want to bear spread down here, but there might be some opportunity there, but it's getting late to be doing that. Do I want to bull spread corn? Not really. No, I don't want to buy the front of corn, sell the back of corn. If this crop starts shrinking, I would consider maybe a 26-27 corn spread, like bull spread going into springtime. But with all these acres, that's not attractive. I don't want to bear spread that one either. The last year I was bear spreading at this time on that one. That worked out just fine. But corn is a little bit... Yeah, I don't trust it on the downside, or there's not enough meat on the bone. On the upside, I really don't trust it either. Last year, the bull spreads worked very, very, very good. Do you want to buy July and sell December this year? I have a harder time than I did last year. The funds are almost completely covered on their short side of stuff. And that was the fuel for the fire last year. Yes, we moved up, but they would have to choose to get long a whole bunch of corn right now. I just am not quite in that camp. So I'm more concentrating on the beans. I really liked wheat versus corn. That got down to, I think, 87 cents, if I'm not mistaken, this last week. Now, wheat's gained a little bit on corn, but still, that's a very attractive spread. That's a very different spread, and definitely call on me for timing on that one. But it is in the zone where you need to watch every tick of that one. A super important spread. That's a feed spread. Either wheat's way too cheap or corn's way too expensive, or both. And I think it's both. They'll fix it in between, wheat coming up probably a little bit or corn coming down. or a combination of all that. So those are the spreads, and definitely stuff going on in cattle. This week's cash trade is going to be important. Depending on what happens and the outlook at cattle here short term, I might have some spreads there or outright option positions. So if you want to call on that, that's something I'm looking at as well. And just happy the markets are starting to move. And I mean, you can see corn up 10 on any given day. Pretty incredible with the numbers that we have. So I'm excited for that. And it feels a little inflationary, and we'll probably be talking about more of that next week. What do you see?
Not much. I mean, I'm kind of watching the same as you. So I don't know. Is it too late to be watching the October-December cattle spread? That's one that I've had my eye on for a long time. It's kind of been all over.
Yeah, it's been really interesting. June was really doggy against August, and the cash was screaming higher. It looked like a really good idea to bull spread, and ultimately it was a very good idea. Then August kind of did the same thing to October, really doggy. And it didn't want to gain, and then all of a sudden that gained quite a bit on October. Now, October versus December is the worst one. October is under the price of December, where the other ones were inverted. So for whatever reason, and it's seasonal to some degree, October is under December, but that could easily go inverted. But that's been wildly unpredictable. It's not been acting good at all. It's probably more helpful that cattle will go down than up. For that bull spread, but I don't trust it enough to be in it. I liked it before, and it's just for 2 weeks it's done nothing. Has a really hard time gaining. So the pattern is changing a little bit there in cattle. I do have my eye on the feeders. There's a couple inversions and feeders that aren't normally there, very inverted. And then if you see live cattle, also the June over the August, June 26 over August 26. That's heavily inverted. So there is opportunities on the bull and bear side. I'm more leaning on the bear side right now, but not too much excitement. Not as much as you would think with a market like this.
Right. And in cattle, anything that said bear reminds me of picking up nickels in front of a steamroller.
Yeah, this thing might not be over. Nobody knows. They certainly aren't done paying in the sale barns, nor are they going to be. These guys will pay anything. It's going to take a lot more to get their attention for them not to pay. And simple as it's been working. Like if you skipped the sale and didn't buy, you regretted it every single week. So that's how bullish markets and bull markets end and tend to be very punishing, because the guys at the top end up paying way too much. And in hindsight, they couldn't believe they were paying that. And it feels like that in feeder cattle, but I also understand that it's a like you say, steamroller. Like these guys will pay anything, and that's what the index goes off of. So it doesn't matter if it's irrational. It doesn't matter if they shouldn't. It mathematically doesn't work. It doesn't matter that that live cattle are way behind in the spread historically as far as it's ever been, and the numbers don't work that good. Until they're scared in the sale barn, I mean, they'll pay up for it, and that you have to respect until one day it's done. And then in the end, though, they'll have paid way too much, and then realize, oh boy, that was a bubble. Whether it's 450 the bubble or here's the bubble, that's what makes bubbles very tough. You don't know where you are in the bubble. Other guys will say that it's not a bubble and this is the right price. The retail side will decide that more than the sale barn. When you see the retail demand start dipping, that's when you really need to worry. That's my signal. When I see that the box beef dropping, going into winter, that will be hard for us to climb on that. So that's personally what I'm watching, box beef, to see how this reacts.
So do they still use checkbooks in the sale barn, or are they using crypto now?
Oh, I've seen plenty of checkbooks in the sale barn. Cash, checkbooks, you name it. But they're very popular there. I don't see a lot of Venmo stations there, but that's probably coming with the younger generation.
I just figured you can never underestimate a rancher with a checkbook, but what if they have crypto?
Yeah, well, when everybody in the cattle barn starts getting crypto, then I'm going to start selling. Not that I don't think they're heavily involved there. But I wouldn't be surprised to see, like I say, some of these younger kids Venmoing for these cattle in the sale barns here in the coming years. But a lot of checkbooks out, and the pen is on fire. They are writing them. I don't know who's going to fund all this the higher that we go, but so far so good. Somebody's borrowing money to these guys. Plenty of them have the money to buy it, but it's getting lofty up here.
It really is. Well, John, we should wrap it up there. Why don't you leave your numbers so people can get a hold of you?
Sure. 218-731-1578.
Thanks, John.
Yep.
I know you don't want to be on the camera, John,
No.
but people want your beautiful face.
They don't. I don't think it helps sell.